As everyone knows, a couple of years ago when the banking crisis and the Wall Street crisis, a lot of people were writing off Wall Street and investment banks as we know it, and commercial banks. You know, their industry was going to change and all that, but all I can say is not so fast. They all obviously came back, except for the two that went under. And one that I think is coming back very strongly is Bank of America Merrill Lynch. I have Hampton, the managing director there, with me today. You know, it's been a couple tough years on Wall Street, but seniors housing has really weathered that storm,
Yep.
you know, probably better than anyone. What have you worked on most in the sector since, let's say, the end of 2008?
Sure. Well, we've been very busy, and I think even in 2008 we were actually had a fair amount going on. But in 2009, we spent a substantial amount of time raising equity and debt. The equity markets were very slow in the first quarter and into the second quarter, but they opened up in the second half of the year, and the REIT industry, broadly speaking, which where I focus on the healthcare REITs, but the REIT industry, broadly speaking, raised substantial amounts of equity and really recapitalizing some of the businesses that were over-leveraged. And I would say that most of the healthcare REITs who are good clients of ours issued equity during that time period as well. They weren't facing the balance sheet challenges that some of their REIT brethren in the non-healthcare space were, but nonetheless they went out and raised capital. We did equity transactions for them. There were several bond transactions that we worked on. So I would say the last year and a half for us has been mostly capital raising. It's been largely public companies. We have done some private company transactions as well. And the M&A business was very slow last year, and it has started to pick up as we moved into this year.
Everyone needs equity, and you know we have the whole deleveraging of the country basically going on right now, except for the federal government. And this year, Sun Healthcare did a very oversubscribed secondary equity offering in anticipation of splitting into two companies.
Right.
Do you see more secondaries coming out in the market just to strengthen the operating companies? Or is that a one-off thing because of their special spinoff?
Sure. Well, it is a unique situation. Having said that, I would expect that we would see further equity issuances from, again, the REITs will continue, I think, to be issuers of equity capital as they look for acquisition opportunities. But at the operating level as well, I think you are likely to see equity raised. I think there will be opportunities for these companies to buy other companies. There may be situations where it makes sense for companies to continue to delever. And there may be circumstances where some existing investors look to sell some of their secondary shares and redeploy that capital elsewhere as stock prices hopefully trend higher from where they have been over the last year and a half. So yeah, I think that there would be any of a number of different opportunities over the next year or several years where we'd see some activity of that nature.
And you said you've done a lot of financings for REITs. You know, REITs have cleaned up their balance sheets. They've got, I would say, in the healthcare REIT side, several billion of acquisition capacity. Do you see them doing a lot more in the senior housing side?
Yeah, absolutely. Yeah, I think that you will continue to see a substantial amount of interest in seniors housing assets. The healthcare REIT Merrill Gardens deal announced recently, I think, is a good indication of that. I think there are other opportunities that people are looking at today, and I think seniors housing is of much interest. I think you'll continue to see some investment in the skilled nursing sector as well.
And the M&A market, you said that's been a little on the slower side. You know, we had a peak in 2006 of about $22.6 billion in announced senior housing and care deals, and then very quickly, in just a couple of years, that just came crashing down to $1.8 billion. You know, which is really nothing. What do you see kickstarting the sector's M&A business going forward? Is there something that you see that can do that?
Honestly, I think it's already in process. I think there are opportunities today that could be interesting to the healthcare REITs. I think that the cost of debt capital is at levels that provide very attractive returns to investors. I think the healthcare REITs, is perhaps distinguished from the operating companies, have stock prices that are trading relatively well and not that far from 52-week, in some cases all-time highs. So I think the cost of capital is attractive today, and justifies investment in assets. And I think there are opportunities. I think there will be some activity potentially driven by pending tax changes and the desire to front-run changes in tax laws and the implications that has for the returns to investors. So yeah, I think that while we haven't seen a lot of announced transactions over the last year and a half, if you ask me what has to change for for transactions to be announced, I frankly think the ingredients are there, and I think it's probably time as much as anything else.
Mm-hmm.
And at the operating level, I think you'll continue to see people looking at the market and seeing opportunities to perhaps diversify their business. There's a lot of interest from the operating level in rehab and home health and sectors like that, and I think there'll also be opportunities to add assets to existing portfolios. So my guess is it's probably time more than it is a specific catalyst that causes the M&A activity to pick up.
Well, I was going to ask you, is there any kind of one indicator that you kind of personally follow that might tell you that we're going to have a more active 2011 than 2010?
You know, there's really not a single indicator. Again, I think a lot of the different ingredients that have to come together are in place. I mean, if you ask me to focus on one that is a very good indicator of whether or not you can see future M&A activity, and I think this is true not just in our sector but across the healthcare sector generally speaking, just look where bond yields are. Look at where the 10-year is, and the cost of capital today is such that in an environment with very low treasuries, tight spreads, the cost to borrow is so low that the investment returns are relatively attractive, I think, depending on what your cost of equity is. So if I were looking at one single indicator, I'd probably just look at where a 7 or 10-year bond yield is.
And that is, and the yields today and the spreads are very low if you can get the debt. And that's the that's the big question that's keeping everyone, I think, out of the market. Probably more so on the small deals than the big deals.
I think that's right. I think that certainly the larger companies, the public companies that we deal with, I think that there's ample access to the capital markets for those. I don't think there are any issues. We don't have any concerns about raising capital for many of the companies that we deal with. Again, you're right, particularly the public and the larger companies.
Yeah. Like look at Healthcare REIT. They did sub 5-year deals, sub 5%, I think, on the debt side, and that's huge.
Right, and they raised equity just this week.
Right, what was it, 8 million shares or something like that. Yeah.
A little less than $400 million, I think.
All right, well, great. Thanks for talking with us, and I hope we have a more active 2011 than we had this year.
I hope so too.
Maybe it's in the works.
Always a pleasure.
Thanks.
All right.